If you receive CPP or OAS, stop what you are doing and watch this right now. The Canada Revenue Agency and Service Canada have just released an important pension update that affects millions of Canadian seniors across the country. And if you are expecting your May 27, 2026 payment, there are some critical things you need to know before that date arrives. Payment amounts have changed, eligibility rules have been reviewed, and there are new details about GIS that many seniors have not yet heard about. Whether you have been collecting your pension for years or you are just about to start, this update is directly for you. Do not scroll past this. Stay right here because what we cover in the next few minutes could make a real difference to your financial life. Welcome to Mr. Jack, your trusted source for the latest Canadian government benefit updates, pension news, and financial information designed specifically for seniors and retirees. If this is your first time here, we are glad you found us. And if you are a returning viewer, thank you for being part of this community. We are always working to bring you the most accurate and timely information so you can make informed decisions about your retirement income. Today, we are breaking down everything you need to know about the confirmed May 27, 2026 CPP and OAS payment. We will cover the latest numbers from Service Canada, what has changed in 2026, what GIS recipients need to watch closely, and what every senior should do before the end of this month. Let us start with the basics, because clarity matters when it comes to money you have worked hard for and rightfully earned. Service Canada has officially confirmed that May 27, 2026 is the scheduled payment date for both CPP, the Canada Pension Plan, and OAS, Old Age Security. This is the regular monthly pension cycle, and payments are expected to be deposited directly into the bank accounts of eligible Canadians on or around that date. If you receive your payment by check rather than direct deposit, please allow a few extra business days for delivery. Postal timelines can vary depending on where you live in Canada, particularly for those in rural or remote communities. If you have not already signed up for direct deposit, we strongly encourage you to do so through your My Service Canada account online or by visiting your local Service Canada office. Direct deposit is faster, safer, and ensures your money arrives on time every single month without interruption. Now, May 27th falls near the end of the month, which is consistent with the government's standard payment schedule. Service Canada releases a full list of payment dates each year, and May 27 is the confirmed date for this particular cycle. If you have not seen this date posted in your personal account or in any government correspondence, do not worry. It is confirmed, and your payment should arrive as scheduled as long as your banking information and eligibility status are up to date. One important reminder, if you recently changed your bank account, moved to a new address, or had any major changes in your personal situation, make sure that information has been updated with Service Canada as soon as possible. Delays in payment are most often caused by outdated information on file, not by errors in the system itself. Now, let us talk about the Canada Pension Plan specifically, because there have been meaningful updates in 2026 that every CPP recipient and future retiree should understand clearly. The Canada Pension Plan is a contributory, earnings-based program. That means the amount you receive each month is based on how much you contributed to CPP during your working years and for how long. The more you contributed and the longer you contributed, the higher your monthly benefit will be. For 2026, CPP benefits have been adjusted in line with the Consumer Price Index, which is the government's measure of inflation and the cost of living in Canada. This annual adjustment is officially called indexation, and it is applied to CPP payments every January. The purpose of this adjustment is to help ensure that the purchasing power of your pension keeps up with the rising cost of everyday goods and services, things like groceries, utilities, and prescription medications. The maximum monthly CPP retirement pension for someone who begins collecting at age 65 in 2026 has been updated. However, it is very important to understand that the maximum amount is only received by a very small percentage of Canadians, those who contributed the maximum amount to CPP for the majority of their working lives. Most Canadians receive somewhere between 40 and 70% of the maximum, depending on their individual contribution history. If you are unsure of your exact CPP entitlement, you can log into your My Service Canada account at any time to view your statement of contributions. This document shows your complete CPP contribution history and gives you an estimate of your expected monthly benefit at various ages. Speaking of age, your decision about when to start collecting CPP has a significant impact on how much you receive. If you start collecting at age 60, your monthly amount will be permanently reduced by 0.6% for every month before your 65th birthday. That reduction adds up over time. On the other hand, if you delay collecting CPP beyond age 65, your benefit increases by 0.7% for every month you wait up until age 70. At age 70, the increase stops regardless of whether you continue delaying. So there is a meaningful financial difference depending on when you choose to begin. There is no single right answer for everyone. It depends on your health, your other sources of income, and your financial needs. But understanding these numbers helps you make a more informed decision. Another important update for 2026 relates to the CPP enhancement, which has been phasing in since 2019. Under this enhancement, workers who continue to contribute to CPP are building toward a higher future benefit than previous generations. If you are currently still working and contributing, this is good news. The enhanced CPP will mean a more substantial retirement benefit in the years ahead. Let us move on to old age security, which is the other major pillar of Canada's public pension system. Unlike CPP, OAS is not based on your work history or contributions. It is a flat-rate benefit provided by the Canadian government to eligible residents who meet specific age and residency requirements. Most Canadians who have lived in Canada for at least 10 years after the age of 18 and are 65 years of age or older are eligible to receive OAS. OAS payments are reviewed and adjusted 4 times per year, in January, April, July, and October, based on the Consumer Price Index. This quarterly adjustment process is designed to ensure that OAS keeps pace with inflation throughout the year, rather than just once annually like CPP. This is actually a helpful feature for seniors because it means your OAS benefit can increase multiple times during a single calendar year if inflation warrants it. For the April to June 2026 quarter, Service Canada has confirmed the applicable OAS rates. Recipients who are between the ages of 65 and 74 receive the standard OAS pension rate. Seniors who are 75 years of age and older receive a higher rate because the government introduced a permanent 10% increase to OAS for those aged 75 and above. This increase was implemented to acknowledge the greater financial needs of older seniors, many of whom face higher healthcare and living costs as they age. Now there is one aspect of OAS that many higher income seniors need to be aware of: the OAS recovery tax, more commonly called the clawback. If your net annual income exceeds a certain threshold, the government will recover part or all of your OAS through the tax system. For the 2026 income year, the OAS clawback begins at a specific income level set by the CRA. The recovery rate is 15 cents for every dollar of net income above that threshold. If your income is high enough, your OAS benefit can be reduced to zero. This is why tax planning is so important for higher income retirees. If you believe you may be subject to the OAS clawback, speaking with a financial advisor or tax professional before the end of the year can help you manage this effectively. If you are approaching age 65 and have not yet applied for OAS, keep in mind that Service Canada may automatically enroll you in some cases, but not always. It is best practice to apply at least 6 months before you want your payments to begin. Applications can be submitted online through My Service Canada account, by mail, or in person at a Service Canada center. Now we come to an extremely important part of today's update, the Guaranteed Income Supplement, or GIS. GIS is a non-taxable monthly benefit added to OAS for low-income seniors in Canada. It is one of the most valuable and often underused benefits available to Canadian retirees. If you are 65 or older, receiving OAS, and your annual income is below a certain level, you may qualify for GIS. And if you qualify, the extra monthly amount can make a genuinely significant difference to your financial security. GIS is also adjusted quarterly, just like OAS, based on inflation. This means the amounts available in the April to June 2026 quarter may differ slightly from what was paid in the January to March quarter, and amounts will be reviewed again in July. The amount of GIS you receive depends on your marital or common law status and your annual income. Single seniors with little to no income other than OAS receive the highest GIS rates. If you have a spouse or common law partner, both your incomes are considered together when calculating your combined GIS entitlement. Here is something many seniors are not fully aware of. GIS is income tested, meaning the government calculates your eligibility based on the income you reported in the previous tax year. This is precisely why filing your income tax return on time every single year is so critical, even if you had little or no income. If you do not file your taxes, Service Canada cannot calculate your GIS entitlement, and your payments may be delayed, reduced, or stopped entirely. For many low-income seniors, this is one of the most common and avoidable reasons for missing out on GIS. The fix is simple. File your taxes on time, every year, without exception. If your income has dropped significantly from one year to the next, perhaps because you stopped working, experienced a major life change, or lost a spouse, you may be able to request that Service Canada use your current year income to calculate your GIS instead of the previous year's income. This process involves submitting a statement of estimated income, and it can result in you receiving a higher GIS benefit much sooner than if you waited for the standard annual review cycle. For couples where one partner passes away, the surviving spouse may also qualify for the allowance or the allowance for the survivor, which are related benefits for those aged 60 to 64. These benefits are often overlooked, but they can provide meaningful support during a very difficult financial and personal time. If you think you may be eligible for GIS and have never applied, or if you stopped receiving it and are not sure why, we strongly encourage you to contact Service Canada directly or visit their official website at canada.ca to review your eligibility. Let us take a step back for a moment and talk about what all of this actually means for real Canadians in day-to-day life. Pension increases tied to inflation are genuinely helpful, but the reality is that for many seniors on a fixed income, the increases do not always fully offset the rising cost of living. Food prices, utility bills, rent, and healthcare costs have all been elevated in recent years. While CPI-based adjustments help, they are calculated using a broad basket of goods across the entire economy, and that basket does not always reflect the specific expenses that seniors face most acutely. That is why it is worth looking carefully at every benefit you are entitled to. If you qualify for GIS and are not receiving it, you are leaving money on the table that the government has already set aside for you. If you have not reviewed your CPP start date strategy, a small delay or acceleration in that decision could mean hundreds of additional dollars per month over the course of your retirement. It is also worth knowing that some provinces offer additional top-up benefits for seniors on top of the federal CPP, OAS, and GIS programs. Depending on where you live in Canada, you may be entitled to provincial senior benefits, property tax relief programs, prescription drug coverage, or transit subsidies. These programs vary by province, so checking with your provincial government's Senior Services Department is a worthwhile step. For seniors who are still working part-time, it is important to understand that employment income can affect your GIS eligibility. In recent years, the federal government has introduced a GIS earnings exemption, which allows low-income working seniors to earn a certain amount from employment without having their GIS fully clawed back. Understanding how this exemption works can help you plan your work and retirement income together more effectively. And finally, on a broader level, the Canadian government has reaffirmed its commitment to maintaining the OAS and CPP systems as financially stable, long-term programs. There has been political discussion in recent years about the sustainability of these programs, but official government projections and independent actuarial reports consistently show that both CPP and OAS are funded and projected to remain viable for many decades to come. You can continue to rely on these programs as a foundation of your retirement plan. Before we wrap up the main content, there are several important alerts we want to make sure you hear clearly. Watch out for pension scams. Every time there is a major government announcement or payment update, fraudsters try to take advantage. You may receive phone calls, text messages, or emails claiming to be from the CRA or Service Canada, asking you to verify your personal information or banking details. Be very clear on this. The CRA and Service Canada will never call you out of the blue to demand immediate personal information or threaten that your pension will be suspended. If you receive a suspicious call or message, hang up or do not click any links. Report it to the Canadian Anti-Fraud Centre at 1-888-495-8501. Update your banking and personal information immediately if anything has changed. If you recently switched banks, changed your mailing address, or had any changes in your household, contact Service Canada as soon as possible to update your file. Outdated information is the #1 cause of payment delays or missed deposits. File your 2025 income tax return before the deadline if you have not already done so. Your 2025 tax filing is what Service Canada uses to determine your GIS eligibility and OAS clawback status for the benefit year that follows. If you have not filed yet, do so as soon as possible. Free tax clinics are available across Canada for seniors with modest incomes. Visit canada.ca to find a clinic near you. If your May 27, 2026 payment does not arrive by June 2, 2026, meaning 5 business days have passed since the payment date, contact Service Canada directly to inquire. Do not wait weeks to follow up. The sooner you report a missing payment, the faster it can be investigated and resolved. Review your My Service Canada account regularly. This online account gives you access to your payment history, contribution records, direct deposit details, and correspondence from Service Canada. Staying on top of your account ensures you are never caught off guard by changes to your benefits. All right, let us bring everything together. Today we confirm that May 27, 2026 is the official payment date for CPP and OAS as released by Service Canada and the CRA. We walked through the latest 2026 CPP rates, the quarterly OAS adjustments, and the critical importance of the Guaranteed Income Supplement for low-income seniors. We talked about what the OAS clawback means for higher-income retirees, how the CPP enhancement continues to grow your future benefits if you are still working, and the real day-to-day impact these programs have on the lives of Canadian seniors. We also covered 5 important alerts, from protecting yourself against pension fraud, to filing your taxes on time, to knowing when and how to follow up on a missing payment. The most important thing to take away from today's video is this: you have rights and you have benefits that belong to you. The best thing you can do is stay informed, keep your information current, and make sure you are collecting everything you are entitled to. At Mr. Jack, that is exactly what we are here to help you do. If you found this video helpful, please take a moment right now to subscribe to our channel by clicking the subscribe button below. Hit the notification bell as well so you never miss an update. We publish regular videos covering CPP, OAS, GIS, CRA announcements, and other financial news that matters most to Canadian seniors and retirees. You can also leave a comment below if you have a specific question about your pension or if there is a topic you would like us to cover in a future video. We read your comments, and your questions often inspire our next updates. Share this video with a family member, a friend, or a neighbor who receives CPP or OAS. Sometimes the most valuable thing you can do for someone you care about is make sure they have the information they need. They might not have seen this update yet, and a simple share could make a real difference. Thank you so much for watching. Take care of yourself, stay informed, and we will see you in the next video right here on M for Jack.